Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Wednesday, January 3rd, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. ES putting in all-time highs here at 26.9875, pushing just beyond last Friday's high here, testing prices just above the previous month's high. And so far seeing a little bit of a pullback from that zone, but for the most part a very narrow range day building out. We're coming out of this very narrow range that had formed heading into the new year. Typically speaking, the market will test both sides of that range before final direction is seen. We could continue to build out. For example, any rejection here at 2700 could come back and take out recent lows. That could still be a buying opportunity to bring it back up as the market either develops a wider range to create a wider playing field or just continues onward to the upside. So for the most part, we still have our uptrending market intact. Any pullback still buying opportunities, but right now the market is still trying to sort out this narrow range. So not a whole lot of opportunity just at the moment. Let's take a look here at the NQ. The NQ had quite a bullish trend day structure in the previous session. In the pre-market report, we talked about the trigger zone here and how the market was right inside that zone. And that's usually a buying opportunity for a retest of at least these highs. And the market came out hot, broke through multiple day highs, and had a big time trend day structure up, closing near highs on the day. Very, very bullish overall. And again, just goes to show you the power of the trigger zone in an uptrending, stacked and sloped environment. And overall, this thing continues to be a bullish trending structure. So you've got to continue to respect these pullbacks, look to defend them for continuations higher. Right now, based off of the recent low here, we do have a primary target zone up here that's showing itself very nicely. That right there could be the target zone that we're headed toward. This is 66.45 to 65.79. That's your target zone. So we could be looking at more strength toward that zone. Again, always got to keep an eye on the previous month's high. Any rejection there would suggest a retest of lows. So again, very bullish trending structure. Buying pullbacks, buying dips, still favored in this market until proven otherwise. Let's take a look here at crude oil. Crude oil maintained its hold below 60.51 yesterday, which is this high. That's the previous month's high, 60.51. Bears defending throughout the day at that zone, but really didn't show major rejection. Just kind of held in a tight range. And in overnight trading, pre-market trading here today, we've seen price push through the midpoint of the previous session's range and just run those stops. So no real rejection being seen. I mentioned to our trading group that this could take a day or two or three to build out up here. And really, it's this 60.10 level where the stops are. And that would suggest a pullback, perhaps back toward 58, and maybe even as low as 56.83s. But again, until we see rejection, it's not really a time to sell ahead of that. It would be a reversion to mean trade. That trade, as I mentioned before, is always very difficult when you are counter trend trading. And this is a very strong bullish market, and we still have an upward bias toward about 62. So again, this is a very strong market, and right now you have to be very careful about any fading opportunities, and right now it just doesn't show that it's ready to pull back just yet. So still pushing higher, still continuing to the upside. That could lead to a little bit more uptrending behavior, perhaps toward the upside targets here, which at the moment 61.30 would be the closest one, and 62.75 would be the next highest, and that's based on average monthly range. So still pushing higher. 62 right here, major LVN. That would be perhaps a first test sell opportunity should we see that zone. All right, let's take a look at gold. Gold continues to show strength overall, pushed higher through 1320. That's a big time move that we've seen here since those 1240 lows. Major impulse rally being seen. So if we find a strong top or a strong high here after this strong low, that could easily imply a return back toward the midpoint of that range to give us a key range to play off of. Right now we're not seeing major signs of rejection just yet, but we are seeing the beginning of what could be a developing top up here. You have this midpoint that's going to be very important. That's the current lows of the day. You see price tried to push beyond the previous session's high but failing. So this could be the beginning of a developing top that could lead to a pullback back toward that mid, but again, very similar to gold and crude oil. They're both kind of in the same spot here where you don't want to fade a strong market just yet. Got to wait for that strong rejection. So we're going to continue to watch for signs of rejection that could suggest some sort of pullback. All right, that does it for the analysis. One quick update here, news item. Later on this afternoon, if you'd like to join me at 3:30 p.m. Central Time, I will be hosting the monthly market outlook for January, our first of the year. Everyone's invited, and I'd love to see you soon. So let's talk some markets later on this afternoon. All right, that's it for now. Let's see how these play out. Good luck and trade well.